Hi, folks. Welcome back to Full Bore Silver. Congratulations again. New nominal high on silver. We breached 70 this morning. Was watching it all night and finally happened this morning. 70.66. Beautiful breakout from the patterns we went over yesterday and the day before out of that falling wedge. We needed that consolidation, that coil, as Classic Car Traveler commented, you need the consolidation, the buyers are on the sidelines, the seller exhaustion, and then we exploded. And wow, that sun is bright. Just a beautiful thing. We also have platinum, palladium, copper, gold, all going crazy. Platinum 22.22, palladium 18.53 was hit. Copper all time high 5.98. Gold knocking on the door of 4,500, 44.97 was hit, 45.30 on futures. They all exploded out of this very similar pattern. That's why I use it. That's my core competency with the technical analysis, is trading those falling wedges, descending columns. There's a million ways to do technical analysis, and people prefer different patterns. This is the most consistent for me, so that's what I try to pass along through the education and entertainment, not financial advice. But you can see how it's worked out. A couple interesting bits just scanning YouTube. Adam Taggart had Kevin Weir on. He was talking about the overvaluation of the SPX. We've talked about the Schiller ratio, how we are at a 100-year event right now where the valuations and the prices of these companies, the Mag 7, which comprises 47% of the SPX, their valuations and prices there's never been this much spread between that and the earnings of these companies. So it's kind of alarming, very similar to the right before the dot-com bust. So pay attention to that. He was talking about NVIDIA being at 33 times sales price, okay? Not 33 times earnings, 33 times sales. Of course, we know why this is. It's record Fed printing, money injections. It all adds up. The Fed repos, the devaluation of the dollar, etc. Here was an interesting tweet from September 29th, 2011, and it reads, "The Fed's reckless policies of low interest and flooding the market with dollars needs to be stopped, or we will face record inflation." Smart post on Twitter from 2011. That was done by Donald J. Trump. So how times change, right? Uh, I believe that the smart, savvy investors with foresight are trying to get ahead of this. I think we're entering a 10-year bull market. It's no coincidence that all these metals, all the precious metals, the base metals, the commodities are all gaining steam. They're breaking out of these patterns. We can kind of see this repeated. So we're paying attention to all that. Clive Thompson was on this morning talking about the decoupling of the paper and the physical markets. JPM, HSBC, Deutsche Bank, Scotiabank, Bank America, they've all had their run with these shorts, and now they're losing their shorts. They're losing tens of billions of dollars with these short positions. Of course, a lot of the American banks have switched long. You still have the European banks, the archaic view that they can manipulate these markets with these paper contracts. The real physical markets are starting to take hold in Shanghai, and we have the unprecedented industrial demand, the build out of power infrastructure in China that we've talked about. So all these forces are kind of co-aligning, and it looks fantastic for silver. Another news bit, Hecla Mining, which I'm real bullish on, not financial advice. Again, broke out, and now we're kind of consolidating a lot of these names. But Hecla Mining, Debbie Wasserman Schultz, Congresswoman, uh, who was on the Environmental and Critical Minerals Subcommittee in Congress, took a huge stake in Hecla. and since that filing, Hekla's up 200%. I still think it has a long ways to run, as do a lot of these miners. Of course, with these equities, they are risky, and you do need to pay attention to them. Set your stop losses, have your triggers. It's not like owning the physical. This is a really dynamic market, and especially if you're trading like options or that sort of thing, which I do. You have to really pay attention to theta, which is the time decay, the implied volatility, and all the different factors. It's like calculus, really. Your best bet is to hold physical precious metals. So that's what I would recommend. So we've had these record highs, and now we drew back on silver. I think we're back in the 69s right now. So more consolidation. So we'll see where it goes, but really excited. You pop out of bed in the morning and you see new record highs on something that you have a lot of conviction in, and so it's kind of gratifying. And so congratulations to everybody, that all the forward thinking folks that are tuning into this. I really appreciate you. Man, we have some really smart commenters and really enjoy interacting with some of y'all. Pat, Classic Car Traveler, Daniel James, Gary, Copper, Anbar Marine, Joey, Clyde, Marilyn, Howie. Is that the Howie that I think it is, that I used to have foot races with? Man, there's a lot of great people, so I really appreciate your feedback. Keep it coming. So, it's probably going to slow down a little bit, but for Christmas holiday. But you never know. It's we have the overtaking of these markets. It's not so much emphasis. There is a shifting from LBMA and COMEX CME to Shanghai. So that's really exciting to see. We've talked about the industrial and energy build out in China, how they are blanketing the country with the photovoltaic cells, the solar panels, the nuclear build out, the industrial and retail demand in India. And so we have a lot of co-aligning factors going on right now, so very interesting to see. Another interesting point was Don Durant was on, and his specialty is analyzing the miners. If anybody's read his book, let me know your thoughts there. I think I'm going to pick that up and give it a read, but he ran down his favorite 5 miners, which are the exact same that we've been talking about, coincidentally. So he did Core, CDE, he did Hecla, HL, Pan American Silver, PAAS, First Majestic, AG, and Endeavor, EXK. They all have the same pattern. They break out, they form the bull flag, and then up, and away. So another one was Eric Sprott. We talked about that yesterday. Dude was fast and loose on a podcast. Again, I think he probably had a glass of scotch or something before the podcast. But he was talking about Highcroft and Chesapeake Gold. And Highcroft is, it's up like 20% since he talked about it. So he has a lot of conviction in that. Armin was another one that I picked up, ARMN, and that's a Frank Giustra, and anything that guy touches turns to gold. Aaron, Texas Silver, turned me on to that one. So that was interesting. We're going to keep an eye on all that. I think we're entering a 10-year commodity bull market, analyzing all these factors and trying to just process and aggregate as much information as I can. There was one commenter that was... he commented that he didn't like to see the pullbacks and the consolidation in these markets, but that is a healthy behavior in any asset market. And he said there shouldn't be pullbacks and consolidation. These markets are manipulated. Well, every single asset class in human history has been manipulated, and you need the consolidation and the spring coiling before the next rise up. People have to transfer money around. People have to sleep. People have to take the kids to soccer practice. It does not parabolically go up. So I just wanted to bring up a quick chart just to kind of demonstrate that. I don't know if you remember this one, but the short squeezes that happened with AMC and GME. Let's go to Interact. Now, this was back 2001. Look at this candle. We're on the monthly. We had a high of 393.63 and a low of 154.65 in this month, which was June of 21. You can see that parabolic rise, just that God candle that went up. And there was a lot of froth and fury around that. And people were buying in, lots of retail, Wall Street bets, Redditors, Zoomers, everybody was buying this thing. I bought in. I made tens of thousands of dollars in the course of probably 20, 30 minutes. But intuitively, I knew that this parabolic rise would have to return to Earth. A lot of people lost their asses on this. I was able to get out with profit. Now, don't pat me on the back too hard. I had money locked up in Voyager. You all remember the huge Sam Bankman-Fried scam and Alameda Capital. This was involved with crypto. And I had tens of thousands of dollars locked up in Voyager, which they basically seized, and I wasn't able to get back. So the entire, that was a wash, what happened right there. So I made tens of thousands, and then I lost tens of thousands, had it locked up for months and months. I got a portion of it back, but this is why I'm so adamant about not keeping huge sums of cash in banks. We see the continual Fed repo action. They're not doing that because they're bored. They are injecting cash into this system because all of these banks are on the fractional reserve system, which is not healthy. They loan out 10x what they have in their reserves. It's a Ponzi scheme, and eventually when everybody comes to get their cash at once, they don't have the cash, then the bank fails. We saw that with First Republic and Silicon Valley Bank in March of 23. So get your cash out. I prefer to keep it in physical silver bullion. We did the unboxing yesterday. You know, I had a few grand sitting in a bank account. I said, let's pull that out and let's make a buy. So we made the buy at 61. And now the premium on a lot of those coins, if you were going to go buy them, is between $72 and $76. So, you know, right away, I did it more as a store of value and divesting from the bank for security and safety reasons. But, you know, you've already got the appreciation on that. So we're going to continue to watch these developments in all the metals markets in this developing commodity bull market. I thank you so much for tuning in. Hey, real quick, folks, here we go with silver pushing up again into the 70s after they did try to smash it down for all the doomers that said it was falling. It's another assault on new highs. Again, all these markets are manipulated. Every asset class in history, from the Japanese rice markets in the 1700s where they developed candlestick trading to everything. You know, one of the most manipulated markets in the world is the diamond market by the De Beers multinational. And there was such an oversupply of diamonds that if they released their entire supply from all their vaults, diamonds would probably be worth about as much as this sea salt. So incredible. I mean, some markets are manipulated up, some are manipulated down. Again, I think we are seeing true price discovery on silver. Very excited for that. So good luck with all your Christmas preparations. We'll be talking to you soon. Again, like, subscribe, share Full Bore Silver. One other thing, I did establish an X account for Full Bore Silver. It's at Full Bore Silver, so go check that out. Going to be a little slow in the ramp up, but should have some quick takes on there. Have a fantastic day.